Good morning, everyone. You are watching a live daily market outlook from Windsor Brokers for Friday, 3rd of May 2013. Another busy day ahead of us, the third in a row with the U.S. non-farm payrolls data to be released today, seen as a top release and the main focus for today. The currency steadied during the overnight session following yesterday's strong movements where the euro lost nearly two big figures on the fall after the European Central Bank, as expected, dropped the rates by 25 basis points, but comments that came afterwards basically shook the markets and pushed the single currency significantly lower. The comments from the ECB President Mario Draghi, who said that the bank is technically ready for negative deposit rates, as well as noting that downside risk to the Eurozone economy still persists. This was the main driver, as a negative deposit rate would effectively penalize banks for hoarding cash. Such a move, if implemented, could drive money out of the Eurozone into the other higher yielding assets and will encourage the banks to lend out money rather than hold it in the central bank. Some improvement was seen on the single currency this morning after comments of European Central Bank, one of the officials, Novotny, who said that this is not going to be implemented for now. So this was just something that they mentioned that they are ready to do, but will not be implemented. And basically this pushed the single currency slightly higher this morning, hitting levels above 131 handle. Sterling held steady and being contained above 155 level overnight, following a pullback from a recent peak at 156.05 that dipped at 154.96 yesterday, basically holding still a positive tone for possible renewed attack higher. Dollar against the Japanese yen is steady after yesterday's bounce of 97 base that reached levels nearly 98.50 and now averting immediate downside risk for possible stronger recovery. The dollar Swiss is higher off its recently established base at 92.45, holding above 93.00 with the 93.60 high seen so far. Also, the Aussie dollar recovers slightly the recent heavy losses when the upside rejection under 104 level triggered this sharp pullback that fully retraced 102.20 to 103.83 rally. Currently trading at around 102.50 after bouncing to 102.80 overnight. Still the negative tone persists and keeps the downside focused. From the other side, the commodities appreciated yesterday's movements as crude oil bounced to 94.22. This was the highest seen close to the end of the US session, following bounce of 93.86 low of yesterday, with the near-term positive tone now being established for possible stronger movements, stronger recovery. The similar situation is with the gold that after hitting a low at 1440, just above the previous high at 1438, fully reversed past today's sharp fall after breaking the triangle consolidation and returning to the previous range tops at 1479. That again brings more positive tone into the structure of the yellow metal price action, and sees again now more potential towards the upside. Basically, the recent movement was quite short-lived, and the price returned back to the levels of 1479. This was the peak, the ceiling of the previous range. Seeing again potential for possible test of our key barriers at 1485.87. That require break of which is required to open way for a stronger recovery, and this look for test of breakpoints at 1500, 1520. From today's calendar as set, the non-farm payrolls data are the key release today. Before this, we have services PMI from UK at 8:30, 52.5, slightly above the previous release in March at 52.4, forecasted for today. Eurozone economic forecast and the producer price index for March are due at 9 o'clock. GMT forecast for PPI is minus 0.1% versus 0.2% of February's release, and then we have the US NFP data that are forecasted at 155, around 150,000 is the average forecast, compared to quite disappointing previous month, 88,000. Still, as we mentioned in our previous sessions, the jobs sector is the most weak point of the current situation in the U.S. economy, and basically the one that keeps the economy, slows down the current slight recovery that is seen compared to seen on the release of the recent data that show some improvement. However, the main point is still the jobs sector, and now today's release, if comes at expected or above, then could be a good signal for some stronger recovery. Otherwise, most likely quite disappointing. I think would keep the outlook still grim. The U.S. further data from U.S. ISM non-manufacturing PMI for March due at 1400. Expectations are below the previous release, 54.1 compared to 54.4. And the factory orders for March minus 2% drop compared to 3% increase seen in the month of February. And basically these are the key releases, of course, with the focus on U.S. non-farm payrolls data that are due at 12:30 GMT. That will be the main market driver today on Friday, 3rd of May 2013. From the technicals, we're going to take a look now at a detailed look at the currencies and see what are the movements and expectations for today. As always, starting with the euro dollar. On the hourly chart, we can see that a slight improvement has occurred after the quiet overnight session consolidation of yesterday's low at 130.36, bounce above 131, reached 131.11 so far. The break below the trend line support, bull trend line of the recent upleg triggered the fresh weakness and basically weakened the whole structure, as shows the negative tone prevails on the lower time frames following upside rejection at 132.41 seen 2 days ago, and the completion of hourly head and shoulders pattern now sees more potential towards the downside with 130 zone now offering initial support, but further easing is seen quite likely at this point, as we can see on the 4-hour chart. At 20 days moving average so far caps the upside, and the price quickly reverses below the 55 days moving average. Immediate target is 130.21. that marks 76.4% Fibonacci retracement of the upleg from 129.53 to 132.41 ahead of psychological 130.00 support, break of which is set to reintroduce the recent base at 129.70.50 zone. Conversely, fresh strength that may appear will be looking for test of upside levels where we'll be seeing, if we take the Fibonacci levels, I think it's quite a good thing at this point. The pair so far retraced nearly 38.2% of the yesterday's fall, with the 131.40 seen as 50% and the 131.63 61.8%. Basically, break above 132 is going to shift the focus higher again, and confirm the higher low at 130.36 low of yesterday for possible test of 132.41 recent high. On the larger picture, the daily structure is still positive and still keeps the recent uptrend of 127.50.44 double bottom and the base in play, as the price exceeded the previous high at 132.00, with current pullback still seen as correction, as daily 55 days moving average so far contains the downside, so keeping a still focus towards the upside. The main risk will be seen, of course, on a break below 130.00, and the break point strong support 129.50 recent low of 24th of April, as well as 200 days moving average, below which is to confirm the double top at 132, 132.40, and shift focus again towards the downside, the recent base at 127.50 zone. The next is cable. It, as we said at the beginning, it holds near-term positive tone, as we can see on the 4-hour chart. Current easing is seen rather like consolidation than a corrective action, as 23.6% retracement of the up leg from 151.95 to 156.03 holds the downside for now, and basically the 20 days moving average keeps the downside protected. Any penetration lower would look for another more significant support around 154.50, 38.2% Fibonacci retracement, and the 55 days exponential moving average. 4-hour indicators are heading south, descending, still in the positive territory. This could indicate some stronger corrective action, with our key support standing at 154 zone, where we have previous high at 154.10, as well as 50% retracement of the entire rally, a break of which is seen as a trigger to sideline short-term, near-term bulls, and allow for deeper reversal. Conversely, holding above, I would say 154.50, if we allow deeper reversal, keeps the upside focused, and the break above 156.03 recent highs expected to open levels towards 157 zone, where we have 156.88 13th of February high, and 157.00 psychological resistance. Further up, there is a 200 days moving average currently standing at 157.53. The overall outlook on the larger picture is still holding a positive tone, and it remains firmly bullish as the price continues to trend higher along above the bull trend line drawn of 148.30 low of 12th of March 2013. Basically, the price is channeling higher, and currently is attacking the upper channel boundary, break of which is required. That was basically on the hit of 2 days ago at 156.03, where the price touched the channel resistance, and currently is consolidating recent gains, seeing again, according to the larger picture studies, more potential towards the upside. As said, key support at 154.10, 154.00, break of which is to sideline bulls, while loss of 153 handle psychological support, and the trend line support would bring more bears into the action and risk deeper reversal. The dollar yen is in the corrective mode following recent fall from upside rejection levels just under 100 yen barrier that pair in 3 attempts failed to regain, and the subsequent easing that lost some important supports, dipped to 97.00, where the good base has been built. We can see the several attempts here failing to break, resulting in the bounce that was seen yesterday, or up to 98.38 so far. This rally has retraced so far. We have to see the Fibonacci levels to have exactly the retraced, and exactly 50% of the down leg from 99.74 to 97.00 on a rally to 98.38, with the subsequent consolidation now being limited, capped by 55 days moving average, while the 20 days one that is still in ascending mode keeps the upside, keeps the downside, protected. The price hovers around the 98 level, with slightly with positively aligned hourly studies, seeing again more potential for further retracement and further action higher, where we'll be looking for a retest of a recent peak at 98.38, and the possible extension higher, where we have the 98.70, 61.8% retracement, and the high of 26th of April, and then 99.00 psychological resistance, and close to it is 76.4% Fibonacci retracement. Basically, the gain of 99 handle will signal that the correction, the pullback is over, and will confirm the base at 97.00, and again shift focus towards our recent peaks at 99.93, 99.87, 99.74 for possible final attack at psychological 100 yen barrier that the pair is still short of. On the daily chart, the positive tone persists as indicators are well in the positive territory. However, double rejection under 100 barrier now risks double top formation that is still not completed, as the pair found support at 97.00 ahead of breakpoint at 96.70, and basically break here is to confirm the double top bearish formation and allow for a deeper reversal. That will be signal for a stronger retracement of the recent strong rally caused by action of Bank of Japan recently, where the dollar significantly appreciated against the Japanese yen, running from levels near 93, level 92.72 to towards levels just few ticks ahead of 100 barrier. As said, so far the positive tone is still in play, and the regain of 99.00 is required to again refocus our recent peaks and the psychological 100 yen level. The next from the majors is Aussie dollar is in the near term corrective consolidative mode following a sharp fall that reached 102.20 and basically fully retraced the recovery rally from 23rd of April low at 102.20 that was capped at 103.83, just ahead of our initial target at 104.00. This is the 50% retracement of the entire fall from 105.81 to 102.20, and is also a peak of 16th of April. The pair failed to break this level that was required to spark a stronger recovery and avert immediate downside risk, as fresh weakness seen in the past 2 days now brought the price action down to the original levels, and risks further extension of the larger downtrend seen from 105.81 upside rejection of 11th of April 2013, and just close to the multi-month range top that is somewhere around the 106 area. Further extension lower in case of loss of 102.20 would look for psychological 102.00, and that also marks 50% Fibonacci expansion of the latest wave lower from 103.83. Then we'll be looking for a 61.8% Fibonacci expansion at 101.56, and our key support is 101.14 low of 4th of March 2013, and also the larger range floor, as we can see on the larger time frame. The 101.14 marks the bottom of the range established since July 2012, and the price keeps bouncing between these two barriers, 101.14 on the downside and 106.23 on the upside. The initial range floor was at 101.48, but a spike lower down to 101.14 proved to be short-lived, and they kept the range intact for now, as the price bounced close to the previous to the range tops on a rally seen in end of March 2013, and now the pressure is still seen towards the downside, as daily studies are firmly in the negative territory, while lower time frames also hold a negative tone, with the current corrective action being limited by descending 20 days moving average, and the bearish crossover of 20 over 55 days exponential moving averages keeps the downside pressure. Any improvement requires a break above minimum 103.20. However, a regain of 104.00 is required to confirm a double bottom at 102.20 and allow for a stronger reversal. That looks, according to the current situation, quite unlikely in the near term. And finally, from the commodities, a quick look at the crude oil. That is quite significant, as again regained the ground after dipping to 90.10 2 days ago. Fresh strength peaked at 94.22 late yesterday, just short of recent high at 94.66. This is the 29th of April peak. Regain of this level is to confirm the higher low at 90.10 and the open way for stronger recovery, where we have the And next important target at 94.78, high of 10th of April 2013. Basically, the regain of this level is to confirm the completion of the pullback from 94.70 to 85.90 and allow for a fresh extension higher, where there will be another important level, 97.68, 1st of April high. On the larger picture, just to take a look at the weekly chart, the price action of the crude oil is seen consolidating at this point as let's just draw the lines to see basically the triangle is forming at this point, and something like this, or even better if we take it this way. It's moving in the triangular shape with the narrowing range, now seeing a break of either side to establish a fresh direction, with the upper side being now more in the focus, and the range, the triangle top stands at approximately close to 97.00, break of which is to allow for a break higher of the recent congestion that was basically limited at around the 84-85 zone for now, with the downside triangle support standing at 86.55. Short-term structure is positive, as set overextended the hourly see potential for further consolidative action, while the 4-hour indicators are now gaining traction, and seen supportive for a final push towards 94.66, our next target. On the downside, good support, and the key support is at 90.10, break of which is going to sideline near-term bulls, and allow for a deeper reversal. And one of the top performers in past few sessions is gold, as the yellow metal managed to recover most of the, basically all losses seen in past 2 days on a reversal from 1477. That was the highest seen on 1st of May, and then breaking below the range floor at 1460 and losing the previous correction low at 1448, extended the accelerated basically losses down to 1440, where the support was found. Swift recovery initially to 1463, that marks the previous range floor, gave more positive tone, and yesterday's completion of bullish flag consolidation and the break higher sees now more potential towards the upside, as the gold regained the previous range top at 1479, and now looking for a extension towards next significant barriers, 1482 and 1485, as well as 1487, 61.8% retracement of the fall from 1590 to 1321. Next levels are important, as I said, very important. 1500 psychological barrier, and 1526, 76.4% retracement, and more significant is this is the previous strong and critical support of the multi-year range floor that was at around 1525 zone, as now acting as a strong resistance, and basically break above this level is to sideline ideas of major reversal that was initiated on a break below 1520 support, signaling that longer term, basically over 10 years uptrend is at the end, and a possible corrective action, a possible reversal of the trend was seen on the dip down to 1321. So far the downside remains protected, as yellow metals price heads higher again, and sees potential for a retest and break above these important levels. Of course, confirmation will come on extension above 1487 as initial, and then 1500, 1526. That will complete the corrective action and the shift focus again higher. Of course, the yellow metals price action is still in the downtrend from the historical high to the 2 years ago at 1920, with the bottom seen at 1321 for now, and the possible recovery above 1520, 1500, 1520 is to open upside levels towards 1600, and then we have series of barriers. Our key barrier ahead of 1920 stands at approximately 1750, 1800. That is out of range for now, but just worth mentioning. And this is all from my side for today. Please, if you have any question now to submit, I'll be glad to answer. Will Aussie dollar fall? As I said, technicals are quite negative and the downside vulnerable, and as long as we hold below 103, I think a more likely scenario would be further easing. Of course, a lot depends now on today's non-farm payrolls data. If something more dollar negative comes out, then we might see the pair further correcting higher. As said, we have 103 as initial barrier on the upside. Okay, we have some number of questions. Let's start quickly with the silver. The picture looks similar to the gold. The picture of silver shows that the price is still in the consolidative mode, holding below important 25 level that marks 50% retracement of the entire fall, on a bounce from 2200, and the price currently at around 24 level, with the near-term range being established between 23.24 and 24.83. Hourly structure is still I would say neutral at this point, but a break above the moving averages sees again potential for a possible extension higher. We have initial barrier at 24.21 and then 24.57, and the key one is 24.83, 25.00, break of which is to confirm the bottom at 22.00. Conversely, any slide below the support at 23.24 would risk again a slide towards the lower previous consolidation range floor at 22.60 and risk return towards 22.00. This is on the hourly, 4 hour, I do apologize. Hourly structure is more positive and sees again more potential towards the upside. Of course, we have the initial resistance at 24.21, clearance of which is required to resume higher. Moving averages are well positioned, holding below the price, and the bullish crossover 2055 days one underpins currently the action. The next is Dow Jones, I think. The 4 hour structure has lost traction. Basically, we have the congestion here under the recent highs at just under 14,800 and ahead of previous high at 14,822. With the hourly indicators, 4 hour indicators slightly negatively aligned at this point, but still holding in the positive territory, and the price holding above 20 days and 55 days moving averages that are both pointing north, keeping again focus at the upper boundary, which is 14,792 and 14,800 for a possible break higher that will resume the recent corrective recent rally of the low from 14,393, bottom of the corrective pullback from 14,822. On the hourly, the indicators are in the positive territory, and the price still sees more potential towards the upside. Of course, the 20 days moving average should hold the downside currently at 14,743. As also here we have the bullish crossover that keeps the downside protected. Any break below these levels would signal further congestion. Basically, I would say that this is quite the situation shows that the price is congested, but the overall tone is still positive, and again focuses on today's non-farm payrolls data that will affect US indices as well as currencies. And the last one we have Euro yen. Euro yen basically yesterday made a quick move higher and then quickly reversed gains. This was the spike to 129.89, keeping still in the range that is defined on the upside at around 129, on the downside around 128, 127.50. The fresh strength seen this morning now is pushing the price higher again, as yesterday's rally fully retraced, tested the previous high of 129.87, but failed to break higher. That will be signal for a further recovery. The price action is still congested in the triangular consolidation as shown on the larger picture. Actually, we have it good like this also. And from the upside, we have the trendline resistance somewhere here. With break of either side, required to signal a resumption of the either uptrend or spark a fresh downtrend. With the daily structure actually showing much better. We had it from yesterday, being still in the positive territory, as the price was supported on several attempts lower by the ascending trend line and triangle support. That still keeps the upside focused. However, yesterday's rejection and the quick reversal sees that downside remains vulnerable, and the price action for now is lacking strength and momentum for some stronger move higher. Again, focus today on US data. Wow, again, we missed to put the graph. Okay, I do apologize for this. As said, Euro yen is still within the triangular consolidation of the recent strong rally, with the downside being well protected by the ascending trend line. However, yesterday's failure to break above the important 130 barrier still keeps the downside vulnerable, but overall positive tone that persists on the larger picture keeps still focused towards the upside. Our key supports are at 127. This is the recent base, and then another significant one is 124.95, below which each of them more negative tone will come into play. Conversely, break above 129.89, 130, where is also the trend line resistance and the triangle resistance, with the shift focus toward the upper key barriers 130.65 and 131.10. Any further question, please? Yeah, for the euro dollar, I agree with you, because it's lately it's driven by news rather than technicals, and the news contradicting each other, coming moving the price in the both directions. However, if you see the larger picture, we can still say that the pair is within the range, and nothing significant happened except a brief trip above the range top, which is around 132. And on downside 129.50. Okay, quite choppy trading and a quick reversal of direction. Yes, it's quite risky and dangerous for the intraday traders, but larger picture, you can still see what's the main situation, and can always, I think you can always jump into the market for a quick profit and come out once we can see that most of moves are quite sudden and sharp. So entering at any point the right direction, of course, would guarantee you some profits. Of course, you have to be very careful when coming out of position, as moves, as much as they are sudden and sharp, are limited and quickly reversing. So it's the point of choosing the right time to come out of the position in order to avert the risk of a reversal and erasing your profits. But as said, it's range trading and still no direction for the single currency. Upside we have levels just above 132, downside 129.50. While the daily structure is again we can see the congestion here. So break of either side will give us, if you are a trend trader and holding positions for a longer time, then you have to see the break of either direction in order to enter the market in a proper way. But so far, even in the range, although the range is quite risky for trading, you can also jump in the market with this sudden and sharp moves, as I mentioned previously. Any further questions, please? Okay, if no more questions, then I think it's time to conclude our session. Wish you good luck today with the quite bumpy markets. Another reaction most likely will be seen after the release of U.S. non-farm payroll, so be careful. Hold always with the trend with the right direction. Wherever the instruments move, you enter that direction, don't go opposite, and that will guarantee you some profits. We're back on Monday as at our regular session at 7 o'clock GMT, 10 o'clock local Cyprus time, and expect to see you all again, where we'll be discussing and most likely summarizing the past 3 days strong movements, and to see whether a fresh direction will be established, especially that euro that we spoke recently, and of course for the other instruments. Until Monday, I wish you a nice day today, and good luck in your trading, and of course a nice and relaxing weekend. Good luck.